Hi everyone, it's Justin. I want to talk to you today about the changes to employers' national insurance. These are really important. Following the budget of autumn 2024, Rachel Reeves, the Chancellor, set out huge changes to these kind of costs that are going to affect your business. So whether you're running a small business or you're employing hundreds of people, you're going to need to know how this is going to affect your business and the bottom line fundamentally. I wrote a LinkedIn article recently, and this video is ready to accompany that article, kind of outlining my own business and what that meant in terms of a financial kind of net change, breaking it down step by step. So this video is kind of accompanying that, but let's have a look at these kind of key changes. There are three key changes that are going to happen from April of 2025. The first one is the employer's NIC rate is going to rise from 13.8% to 15%. That's a 1.2% increase. Doesn't seem very much, but it can have a big cumulative effect if you've got lots of members of staff. The second one here is there's a threshold change. This is the point at which employers start paying employers' national insurance. Before, that was at £9,100 per year. So once someone was earning £9,100, the employer would start paying employers' national insurance. That's now been lowered to £5,000. So if you've got staff in that kind of bracket that they're earning over £5,000 a year on your payroll scheme, you're going to start to have to pay employers' national insurance. The third, which is a better one, by the way, I've given you the bad stuff first. The third one is that there's been a change in the Employers Allowance. This is the allowance that allows you to offset NIC costs. That was previously at £5,000, and that's been moved up to £10,500. So that's a really good thing for business. But you might be in this situation going, hang on a minute, I've got threshold changes over here, I've got an allowance change coming which is going to benefit me. What's the overall situation? So let's break it down a bit further on kind of what it means for your business. I employ 10 people in my business, and I think I make quite a good example. All of those people earn more than £5,000 per year. Quite simply, that move from kind of that 9,100 down to 5,000, that threshold change, that's £615 extra per year per employee. So that's just a straight increase cost. That's over £6,000 straight away that I'm going to see as an annual increase just because of the threshold change. I then need to think about the 1.2% rate increase of what that's going to mean. So for me, the threshold change is £6,150 a year. The rate change of 1.2% increases my bill by a further £1,571. That's roughly about £7,700 extra in employers' national insurance that I've got to pay each year. Fortunately, because of that change to the employer's allowance, I'm not completely going to be paying that £7,700. It's going to be roughly about a bit over £2,000 a year that I'm going to have in extra national insurance costs for my members of staff. One of the things I do have to think about kind of in all of this is I've got some members of staff who are apprentices, so we're maybe not paying the full rates of national insurance. Obviously, those apprentices, I want them to be, developing their skills, coming along the growth journey with the business, and their wages will be increasing. So I'm looking down the prospect of further increases down the line as people finish their apprenticeships. It can be quite often a complex thing. I think the message to take away from that is, myself at 10 employees, while there is a big increase in terms of the bill, the employer's allowance has softened it quite a lot. So, do get into kind of your numbers, I suppose. Kind of why does all this matter to your business? That's what you really want to know, isn't it? Look, this is, you're being caught up by a broader government effort to kind of increase the government's revenue. You're probably thinking, God, this is coming at a really terrible time. I've got increased costs. My energy bills, yes, they've softened a little bit, but they're still incredibly high. Material costs are still really high. I'm also battling with wage inflation as well. We know there's a 6.7% increase in national living wage coming as well, and living wage percentage increase has been very, very high. In particular, the government are moving it to a single adult rate. So those people who are kind of 18 to the 20-year-old, there's actually going to be quite a significant increase. I think it's around 16%. I didn't look that stat up before I recorded this video, but a potential 16% increase in those kind of wage costs. All of a sudden you're looking at kind of, oh gosh, this is a really tricky situation to handle. I've got these big costs coming from employers' national insurance. I've got the national living wage thing to deal with. And if you're like me, you've got a great team of people and you want to do the right thing for them. I've always tried to pass on the national living wage percentage increase into all of the salaries. Otherwise, you find that people who are at the lower end of the spectrum on the national living wage or close to that threshold start catching up to the people in real terms. So you kind of, I always like to try and keep pace. That becomes really difficult to manage. So you've got to really understand these things. So what can we do to prepare for this? Well, the first thing that you can do is review your payroll figures. So go on, get your payroll numbers in front of you. Count up how many staff that are being affected by that threshold change, that move from the down to the 5,000. How many people are in that category? Simply add up all of those people. That's £615 per head that you find. Now understand what you're paying in terms of national insurance at the moment. Employers' national insurance, of course, and apply a 1.2% increase onto those costs. That's going to give you a rough indication in terms of what your new employer's bill is, and then you can have a look and deduct off that increase in the employer's allowance, and that'll give you your net change. So the first thing is, with anything in business, in my opinion, is to understand something. So go and have a look at the figures. Don't leave this till too late. If you leave it till too late, oh my goodness, it's going to create a disaster for you. You might suddenly be looking at your bottom line going, oh my God. I mean, industries like retail and hospitality have incredibly tight margins. Same with construction as well. Can be very, very tight margins. So really go in and understand those base numbers. I think only once we understand the base numbers can we do something about it. The second thing I want you to consider is salary sacrifice arrangements. Offering benefits like salary sacrifice pensions or electric company car schemes. This will obviously reduce down the total amount people are paying, so therefore it reduces the threshold, and therefore it reduces both employers and employees' national insurance bill as well. Just a little word of note about salary sacrifice is, it can be relatively complicated to set up salary sacrifice pensions in small businesses. It becomes really worthwhile once the business becomes larger. You've probably got more resources in which to manage it. I think for some businesses that might have been put off by it, they might be actually looking towards those sorts of solutions. But remember, a salary sacrifice is just that. You still have to comply with national living wage requirements or national minimum wage requirements as well. And I've seen a few cases where employees are like, oh yes, I'll take a big reduction in terms of I'll take a big salary sacrifice for a pension, for example, and all of a sudden they're not the employer isn't complying with national living wage requirements. So you really, really must understand a salary sacrifice. One of the nice things that I've seen an employer doing in the last couple of years, I've got one client who have got a really seasonal business. They were talking about giving a bonus to staff, and rather than giving a cash bonus, they know because it's a seasonal business, they're going to have a kind of a downturn in their business. So they offered extra holiday to the staff. It was nice, really nice touch. And of course, it's not a monetary value, so therefore it won't attract any national insurance. So the ideas like that, there's other ideas out there, but start racking your brains for ideas. Think like entrepreneurs. Be entrepreneurs. You are an entrepreneur. You've got to kind of think about ways and means that it can be managed. Some cases, tax can be avoided by just thinking slightly differently, like salary sacrifice or thinking about extra holidays or any of those sorts of things as well. My kind of third bit of a key advice here is you've got to budget, you've got to forecast. There's no getting away from this. It doesn't have to be super complicated or anything like that. What we do is every single client that we've got is on a master sheet. Because we do tax returns and company accounts for people, we look at what we were charging them the prior year, and then we try to apply the national living wage increase. We might do national living wage increase and a proportion of this change to national insurance. For us, it's not a huge problem because employers' allowance is going to help us a lot. We also track our time per job. So we might look at a client and say, well, look, they're getting the national living wage increase, but actually we've spent far more time doing their work this year, and therefore we're going to have to factor that in as well. We try and apply a bit of science. It's a lot easier to have conversations with your clients about price increases if you base things on data and analysis, because they're structured conversations. They're not like, well, the costs are going up, so we've got to put the price up. They're not great conversations. It's much better to have a conversation like, actually, we've done an analysis. I can see that my colleagues have spent 25 hours this year doing your work. We've not only that, we'd only budgeted for this number of hours. The national living wage increase is this, so you can actually start structuring these good conversations. And that's the first step is understanding your cost base. Just remember, there's only 3 things that you can do in your business to make more money. That is sell more, cut costs, or increase prices. Everything fundamentally revolves around those 3 concepts. There's obviously a lot of content that goes into them, and they're quite complicated to do, but fundamentally it boils down to those 3 things. I know these changes can seem absolutely overwhelming, but planning now is the key to minimising the impact on your business. Take advice, talk to other business owners and colleagues. Try not to go down this kind of pit of doom and gloom. We've just got to manage kind of what's being laid out by the government, and we do still have some time in which to manage it. I think there has been some criticism of the government that it's come in too quickly and it's not giving businesses time to react. It's happened. It's going to happen. We've just got to now deal with it. It's pointless, dwelling on these sorts of factors. That's not how us as entrepreneurs need to function, is it? So anyway, I'm going to leave it there. Thanks for watching. I'll put my link for the LinkedIn article in the description for the video. So if you're interested and you want a bit more detail, you can go and actually have a read of that article. But thanks for watching, and I'll see you next time. Bye.